Awesome, guys. Jeff here today, back again with another video. So today we'll be talking a little bit more about the bear market. Of course, I think that back in 2021, of course, all of us were going through rallying stocks. We had good tech stocks, we had good growth stock, we had good value stock, we had good dividend stocks. But of course, with all good things, they have all come to an end. But anyway, today we are going through one of the toughest day, of course, again, with the entire market, okay? Not just Twitter and Tesla going crazy after the whole Tesla with the whole Twitter deal. Okay, over here I'm just gonna show you guys. Right now, Tesla is down 7% intraday, 7%, and it's going down even more. And this is not being propped up by any earnings report or anything of that nature. It was simply just from a Bloomberg article saying about how in order for Elon Musk to actually get the money to actually supply for the agreement between Elon Musk and Twitter, he would need to be able to liquidate a huge chunk of his Twitter shares. And because of that, Twitter basically just went on this whole downward spiral. Okay, and it's not just about Tesla, okay? Because of course, if you actually look over here, for example, Meta Platforms down 3%. Okay, if we look at Roku, down almost 9%. Yeah, it's actually 9%. It just basically recovered in the last minute. Okay, if we look at Tesla, we saw it as it is. AMC fall by 5%. We look at Lucid. Man, Lucid is horrible. Lucid is now $18, okay, down by 5%. You look at Roblox, 7%. Bill.com supposedly was actually doing quite well earlier, but clearly down. So down by another 4%. Shift was doing great earlier, yeah, in the pre-market, down by 5%. Robinhood down by 4%. Finally breaking the $10 mark. Kind of gonna get a little bit interesting later on. Rivian down 6%, having talks about bankruptcy. A firm down 5%. And of course, so basically you can see that a lot of these stocks are actually going through the same kind of trend, especially for today. The QQQ is down and the SPY is down. The Nasdaq has been down for the 5 consecutive days. The SPY has also been kind of going down ever since Jerome Powell talked about the whole 50 basis point hike possible increment. So yeah, that kind of have been shaking the market up a little bit. And I thought that I should probably make a video about this, kind of talking a little bit more about what is actually happening in the market. Actually, I'm going to show you guys this, which is the VIX. Man, so this is what is happening with the VIX. Okay, after what Jerome Powell said, which is around Jerome Powell said around here. Yeah. So over here, right after what Jerome Powell said, immediately we had a huge spike up in the VIX. And again, for people who do not know what the VIX is, basically the VIX is just the market volatility index, where we can see how volatile the market is. And the higher it is, the more volatility is in the market. And usually with volatility, there comes more selling pressure than buying pressure. And that's kind of where people usually tend to be a little bit more concerned with the market. So yeah, you can look at a lot of different stocks, even safer ones such as your Unity. Unity is supposedly a slightly safer one, down by 4%, close to 5%. And like if we actually go down to even your Moderna is considerably safe. Hold on. Moderna is considerably safe, and even for such a safe stock, they're also down by like about 3% or so. Zillow, real estate in the United States, getting destroyed, 6% down in the intraday. Upstart, supposedly a company that actually went to about $200 at one point. Yeah. Almost $200. Yeah, I remember it went $200. Yeah, 400. Never mind. Yeah, it was $400 at a point, and right now it's worth $75. Yeah, so down 5%. So AMD. Honestly speaking, I feel kind of bad for AMD because AMD, I do think that AMD is a good company, similar to Nvidia with the whole chips making. However, they do not guide, similar to how Apple and Nvidia, they do not really guide. So AMD at its high was at about 164. Right now, it actually kind of fell to about $86 or so. So this would be most likely 50% downwards. Kind of sad to see AMD actually at this state because AMD, like I said before, I do think that AMD is a pretty good company. But of course, today we don't want to just talk about price action. We do want to talk about the reason for price action movement. And honestly speaking, I think that there's not really much way for me to actually say this. But the reason why I do think that the price action is moving to this extent is because I don't know. I honestly do not know. Jerome Powell talking about the 50 basis point rate hike. I do think that the market has kind of already priced in to a certain extent. I don't think that this would actually call for this big of a sell-off in the Nasdaq and the QQQ. Well, the Nasdaq and the SPY. I do understand that because from a certain point of view, okay, for example, if we're just talking about how some of the risk-on assets are actually selling off by 5-6%, I'll be completely fine with that. But if we actually take into consideration that we're looking at non-risk-on assets, or basically the more traditional store of value kind of stocks also being destroyed. Okay, for Tesla hasn't really been touted as a risk-on asset. If anything, Tesla has been quite safe. Okay, it's a very, very safe, it's a relatively safe growth asset because first thing first, the high market cap, and of course with the amount that it's actually doing with the earnings and such, it is relatively low for a PE to really buy into Tesla, which is why I do think that Tesla is collectively quite a worthy stock to really get into in terms of a store of value. However, of course, right now Tesla being down about 7% in the intraday kind of makes people fear a little bit, which I think that this kind of creates more of a selling pressure that will kind of spread around with all the other stocks as well. For Twitter actually being down by about 2%, and honestly speaking, after a deal for $54.20 per share, dropping to about $50 or so, I don't really see that as a shock or a surprise factor because, in my opinion, I do think that that's kind of is supposed to be the case anyway. So if you ask me, I would most likely, okay, it's not financial advice, okay? Just saying first, it's not financial advice. I will most likely short Twitter because I do think that, chances are earnings is going to completely suck. Facebook, Meta Platforms, down almost 4% as well. Horrible. And this is pre-earnings, okay? And if Meta Platforms do not really show us a good earning today, do not show us a good earnings tomorrow, it's going to be horrible for Meta Platforms. However, I do think that for Meta Platforms, earning for this quarter would be slightly different from the previous quarter. I do think that they will most likely be talking about how the growth of the metaverse has probably been limited, where they are actually kind of limiting the fundings to actually go into the metaverse, and they are actually bringing back the funding to actually put back into the advertising and such, where Facebook actually make most of their money. I do think that that's most likely going to be the case for Meta Platforms, but I'm not sure if they're actually going to be doing so. So I do think that that's going to be a little bit more iffy for us to really see if Meta Platforms is again reported to be plowing like another $10 billion worth into the metaverse R&D, then of course there's gonna most likely be dropping Meta Platforms down to the 140 region, and that's a bet that I'm not willing to take. So even as we are speaking right now, SPY is down again, continuously going down, finding new lows of the day again at $423. So yeah, even for Tesla is also finding new lows right now at about 8% down in the intraday as well. So yeah, honestly speaking, I'm not sure what's the issue at the moment. I really am not. But definitely, I'm almost certain that whoever who's in the stock market, if you are invested in, if you're watching my video, chances are you're going to be invested in similar stocks, and chances are that your portfolio is also bleeding But I don't think that this bleeding is going to continue for a long time. Of course, if a recession do hit, then of course there's going to be a whole new different story for that. And honestly speaking, I do think that the recession probability is going to just keep on increasing higher and higher, which I think that even for Goldman Sachs, they also should actually bring it up. They actually rated that there's going to be 35% chance for us to actually go into a recession. And right now, I do think that there's a high chance that they might actually increase it as well, especially after Jerome Powell talked about the 50 basis point hike. Because if Jerome Powell is going to put a 50 basis point hike on the table, chances are people are going to start egging him on for a 75 basis point and eventually a 100 basis point hike. I'm not sure if Jerome Powell is going to start to move ahead of the inflation curve, because I think that if he actually do that, chances are he's going to force a recession out of nowhere. That's going to be very, very bad for the market. But I don't think that Jerome Powell is going to be hawkish to the extent where he's going to be running ahead of the inflation curve. I do think that a recession is definitely on the table, sadly to say. I do think that it's going to be a little bit more dangerous for the time being, which is why I said before, hedge. Okay, try to hedge your position on good days and try to get out of those positions when the day became, slightly becomes redder. Just get off those positions. Try to find some form of a yield farming method for yourself, because with this sort of market, I think it's going to be very hard. Unless you have a lot of cash, and then that's going to be a different thing. You can just kind of find bigger dips for you to buy into. For people who are very, very interested in Tesla, chances are this is a very, very big dip for you to really get into. Tesla at about $919. $919, okay? Post-earning, after you saw what a good earning Tesla actually went through, and you're now getting Tesla at $919 is crazy. And of course, let's not forget that also Tesla is also going through a split sometime in the next few months or so. People are actually rumoring a 20-to-1 split, which would make Tesla down to about $50 a stock or so. I'm looking at about 10-to-1 split, but I'm not sure myself as well. But yeah, I do think that it's very, very dangerous in the market right now. It's horrible. And the more I'm talking about it, the more the SPY is actually falling. I'm not sure how this would actually turn out. This might actually be the video that we actually see before the recession actually hit. A lot of banks are actually calling it as the road to recession as it is. But of course, I think that calling it a recession is going to be a little bit tough for us to really reach that point. For that paradigm shift called recession is also very, very hard. But of course, we're starting to see a huge shift of risk on asset down to risk off asset. And I do think that a lot of my portfolio is more towards the risk on asset. And that's also one of the main reasons why my portfolio is getting destroyed. Right now, my portfolio is down about 7%. Of course, this 7% is going to most likely be all the risk on assets being destroyed at the moment. But yeah, I'm not sure because I'm going to be uploading this on Wednesday, which is most likely going to be about like 12 hours from now. I'm not sure how the market will be like, but hopefully I'll see you guys later on for the earnings report that I'll be going through later. So yeah, anyway, thank you guys so much for watching. I'll see you guys next time.